Hi, this is Matt McAleer, Director of Equity Strategies at Cumberland Advisors, just after the close on Friday the 7th. Tale of two markets this week. Fixed income, red hot. You probably saw John Musso just skipping down the hallway. My counterpart, Director of Fixed Income, he was on the video last week with the 10-year trading yield-wise all the way down to 285. Real solid bid there. So that's helped out quite a bit in our balanced accounts. Equities, different story. I have my red tie on for the holiday party today, and today's market's trying to ruin that party. A couple quick things. We try to look at the pros and the cons in the market each week. What was positive this week? Very little. If we reach for some positives, it would be that a handful, 5, 6 of the sectors that we own are still trading above that October low that's important to us. As long as we trade north of there, we're comfortable holding those sectors. On the broad side, the S&P is flirting with those October lows. So next week will be an interesting week. I mentioned 2 weeks ago, with everybody looking at that level, I would be shocked if it held. We'll see when it doesn't hold what kind of reaction we get. Probably a lot of stop losses right under there. Could be some more volatility next week. So what are we doing in our portfolios? As you know, we came into October with a good slug of cash in the U.S. portfolio. We piecemealed that out throughout the month to get to the point coming into November that we were only about 3% cash. So November, December has been a grind. Half of the buys we made with that cash looked pretty good, the other half tricky. Mentioned last week, our biggest weakness, energy. Got a little good news today, but not enough to help us out. That position's underwater. We still look good on our healthcare, our medical device buys. Some of the areas, believe it or not, in gold have rallied the last few days as a flight to safety. The point being, we have some good, some poor, but we are fully invested there. So we can change that. We have maximum flexibility. We're going to let the market dictate that for us. Over on international, we came into October close to 25% cash. That was a good slug. We've piecemealed some in. We're at about 19-20% cash. What looks good international? Emerging markets still trading well. Pulled back this week, but trading well above their October lows. That's a positive. Developed markets, awful. Awful. France, Germany, Spain, Europe. Europe trades like poison. That's all I can say there. Fortunately, we're only about 10% Europe, but we do have a little piece there. So that's troubling. Tactical trend, that is a allocation that can be in equities, fixed income, currencies, commodities, or cash. Came into the month, came into November with about 20%, 22, 23% cash. We tried to nibble this week on some transports. That's been an existing position that's traded well. It was like touching a stove with our fingers. Bought IYT about 185, 186, 187, closed today down in the 180 range. So a lot of pressure on transports. Right now, we're just above October lows. That'll be important for us. So what we'll look at next week are some fundamentals and valuations that are getting interesting. You look at Apple at 12 times next year's earnings. You look at some of the solid names such as Abbott Labs, Progressive Insurance. Can they stand up? Can those markets stand up to the technicals with the S&P's weakening? Should be interesting. We'll talk next week.